Hi, examinees. I hope your revision for accounting exam is going well. Welcome to another past paper demonstration, where I am going to help you solve another depreciation question from the Edexcel past paper. This is question 17 from June 2022, Paper 1 International GCSE, under the name Tanet. This question requires the examinees to first find out the carrying value of the sold asset and then work on the provision and disposal accounts. To find out the carrying value, let's first establish what is carrying value. Carrying value is basically the value of the asset remaining after you deduct the provision for depreciation. So you calculate that by subtracting the provision from the cost. Where do you get your provision? From step 3. So let's begin with our usual steps in depreciation workings and work our way until we find the carrying value. So we start with step 1, where we write down the date of sale, date of purchase, and the values of sale and purchase. The date of sale of this question is 30th June 2021. The date of purchase is 1 February 2019. The sale value is $16,400 and the cost of the vehicle sold is $30,000. We move to step 2. In step 2, we establish the accounting year and then further go on to know how many years the sold vehicle was with the company. First, we begin with the year end, which you will get directly from the question that says year end is 31st March 2022. Then write the beginning of the year, which is the next month, April, and previous year, which is 2021. So the current year is 1st April 2021 to 31st March 2022. Then find out the previous years. Keep noting down the previous years until you get the date of purchase. The date of purchase is 1st Feb 2019. Although we have reached a year that has 2019, we haven't actually reached Feb 2019, so we take one more year. So we got 4 years of depreciation to calculate for the sold asset. However, since the examiner says no depreciation in the year of sale, we remove 1 year and we are left with 3 years of depreciation. Now we calculate the depreciation of the sold asset in step 3. We use the equation of the reducing balance method, which is cost minus provision into the percentage depractimility. The first year provision is 0 as it's a new asset, so we take the cost of the asset, $30,000, and multiply by 20%, which gives us $6,000. Then we do the same for year 2, except in step 2 we have a provision. It is basically the depreciation you just calculated in year 1, so you subtract $6,000 from $30,000 and then multiply the value by 20%, and then you get $4,800. In the same, year 3 is slightly complicated. The provision in step 3 is depreciation of year 1 and year 2 combined. So first add first year depreciation, which is $6,000, and year 2 depreciation, which is $4,800. You get $10,800 and you subtract this $10,800 from $30,000 cost and multiply by 20% to get year 3 depreciation. Once you get the 3 years of depreciation, you add them and you get your total depreciation, or the provision for depreciation. Now, we can use this value in step 3 to calculate the carrying value. Subtract this value, $10,800, from the cost $30,000, and you get the carrying value of the sold asset, which is $5,530.60. So you have completed the requirement.
We can now proceed to make the accounts, for which we need values from step 4 and 5. In step 4, we calculate the depreciation for the current year for the unsold asset. We use the same equation, but we do not have the cost of the unsold asset and the provision, so we calculate them separately first, and then substitute in the equation. You can calculate the unsold asset cost by subtracting the sold asset cost from the total asset cost. Similarly, you can calculate the provision of unsold assets by subtracting the sold provision from the total provision. The total cost is given in the question as $68,000 and the sold cost, is given in the question as $30,000. Do the math and you will get $38,000. The total provision is given in the question, which is $18,240, while the sold provision is the answer you got in step 3. Do the math. You get $3,600. Now subtract 3. We subtract $3,600 from $68,000 and then multiply by 20%. And we get 6880 as the answer, which goes to provision for depreciation account as the income statement. This is the depreciation of the asset remaining with the company, which is an expense for the year. 5. Use the equation sale minus cost minus provision. Take the sale given question 16,400, the cost of the sold asset 3,000, and the provision is the value you go to in step 3. You get a positive answer, which goes to debit side of disposal account. Once we have these figures, we can proceed to make the provision and disposal account. We begin the provision account posting the balance BD, which is the beginning of the year balance in the provision given in the question as 18,240. And then we take value we got in step 4 and post it on credit side as income statement. Go to step 3, and the total depreciation you got in step 3 is posted as disposal on the debit side. Now put the dates. The balance BD is beginning of the year date, which is 1st April 2021. Income statement is the end of year date, which is 31st March 2022. And disposal is the date of sale, which is June 2021. Now close the account. To do that, first find the total. The credit side total looks higher, so we find the total and then put that on debit side as well. Then we calculate the difference on the lower side, which is the debit side here. We get a difference of 10,480, which we call the balance CD, and we bring it down and call it balance BD. The balance CD date is year end and the balance BD date is beginning of next year, which is 1st April 2022. We are done with the provision account. Let's move to disposal account. You start your disposal account with the asset you're selling, which is vehicle worth 3,000, so we put that on debit side. Then move to the credit side. Put the value from step 3 as provision. Then put the sale value as cash book below the provision. Then put the profit from step 5 as income statement on debit side. Now put the dates. The asset on debit side is date of sale. The provision and cash book on the credit side are also date of sale. However, the income statement is the year-end date, which is 31st March 2022. Add both sides and they must be same. If they're not same, please go back to find your mistake. We have finished another question on depreciation. Hope this video was useful to you. Comment down below if you have any question and anything you want me to discuss next. Have a good day, and I will see you in my next video.